Welcome to Inside India. I'm Amit Singh. It's a happy Friday. Here are your headlines. Indigo profits take a dive, tumbling nearly 80% as mass cancellations in December sent the country's aviation sector into chaos. Dr. Reddy's shares outperform on a better-than-expected report card and regulatory approval to start selling generic Ozempic in India. We'll have the CEO, Erez Israeli, live in just a few minutes. And the Bank of Japan's decision is imminent, with questions about whether Governor Ueda will signal any readiness to keep tightening policy, while Prime Minister Sanai Takaichi gets set to dissolve parliament and call a snap election. Kaori Injoji is on the ground in Tokyo.
The fate of two very powerful institutions in Japan are colliding at this very moment. On the one hand, the Bank of Japan and looking for a timing to raise interest rates, and the other, the Japanese government, Sanai Takaichi, the prime minister, about to dissolve the parliament later on today.
All right, and that's exactly where our focus, as we look at the Asian markets, is obviously going to be on Japan. Remember, APAC markets in general, they rose on Friday. The Nikkei 225 up about 0.3%. All of this because of what has happened with Trump. Trump has backed off from his tariff threat against the EU, related to, of course, Greenland. We are looking ahead to Japan because the BOJ's decision could come any time. It is expected to hold rates at 0.75%, according to, well, most analysts and economists polled. HSBC expects the next basis point hike in July 2026. So the market's really feeding into that element and perhaps more relaxed and calm. But it has been a volatile time for the Nikkei. It has been down, then up. And all of that because there's been global uncertainty. When you look at the Kospi, it's up about, nearly 1%, and the TAIEX, 0.5% it's up. We're also looking, of course, at the Hang Seng and the Shanghai, both up. Some tech stocks in Asia did fall after shares of California-based Intel plummeted 13% in after-hours US trading on its soft guidance for the current quarter, and that's why the Kospi in focus, but still not bad. Still up about 0.8%. Okay, the Indian markets, they come online in about 45 minutes. GIFT Nifty Futures is indicating a muted start. We're looking at it slightly down, taking it to about 25,338, down about 0.23%. Remember, that's not really that bad news because yesterday Nifty did end higher. It reached 25,289, not by much, but a little bit, snapping a three-day losing streak, buoyed, of course, by that global risk-on sentiment. And in today's trade, shares of Ind Bank, Adani Green, Indigo, Reliance Industries, and Adani Energy, all of that will play into the market sentiment. We're watching all of those stocks, and we're watching the rupee because it did rebound just marginally from its all-time low levels and gained about a little bit, 3 paisa. It closed at about 91.62 right now at 91.52. So that's something we're watching, strengthening against the US dollar. What's going on? Is the RBI intervening? We'll have more insight a little later on the show. Now, trade continues to be front and center in the global discussions because Indian Prime Minister Narendra Modi has said he has spoken with Brazilian President Lula and is looking forward to welcoming him to India soon. Modi said the two leaders reviewed the strong momentum in the India-Brazil strategic partnership, adding ties are set to reach new heights in the year ahead. President Lula has confirmed a state visit to India in early 2026 and has said he plans to raise discussions within the BRICS group on responding to trade levies imposed by US President Donald Trump. News just crossing the wires also that the Chinese president has spoken with the Brazilian President Lula. All right, and he has actually spoken just a little bit back. We're looking at exactly what's been said, and I just want to get into that. What has been said? Well, China's Xi telling Brazil's Lula that effectively urging both the countries to be constructive forces that safeguard world peace, improve global governance, and stand on the right side of history. So we'll get into this in just a bit, these comments coming in right now. Now, developments also coming ahead of next week's visit to India by the European Commission President Ursula von der Leyen and the European Council President Antonio Costa, with the EU and India on the cusp of what is being described as a historic trade agreement. But the markets are focused really on mega earnings. We talked about that just a bit earlier. Q3 report card of Infosys was out. The air carrier has warned of higher per passenger cost for the full year after taking a 63 million hit in the December quarter tied to, well, major operational disruptions. The quarterly profit after tax plunged 78% as the airline booked a one-time charge after thousands of flight cancellations caused by poor roster planning. We will dive deeper into this a little later in the show with our travel and transport reporter, Monica Petrelli. Our focus today in the first half is on the pharma sector. We're watching it especially because the shares of Dr. Reddy were up more than 5% on Thursday after reporting a smaller than expected fall in quarterly profit, supported by steady domestic demand. The earnings update comes as the company received approval to manufacture and sell a generic version of the diabetes drug Ozempic. Everyone knows that name. Dr. Reddy's plans to sell 12 million injectable pens in its first year, targeting India first with Canada and other emerging markets next as the patents expire in March 2026. We have with us right now the CEO of Dr. Reddy's Laboratories, Erez Israeli. Erez, it's great to have you back. We spoke to you after Q2. Now you're back for Q3. We appreciate that all the time. And I remember when we spoke that time, you mentioned a couple of things. And obviously, congratulations on better than estimated results. When we spoke last time, you said core challenges, they remain, and they are the following. Grow the base, contain the cost and business development. And you also said that this is a long-term play. But I want to understand from you between Q2 and Q3, what has changed, what is in your control, and what is not?
No, so the challenges are the same. We're very much consistent. It's, as we discussed, it's a long-term a set of activities. It takes, you mentioned that we got approval for the generic version of Ozempic in India. It's a process that is already 10 years. The main things that happens that we are getting those approval. I think there is a recognition of market that things are happening, and we are grateful for that. Naturally, what is not in our approval is the timing in which we get some approvals. In the normal situation of any pharmaceutical company, you register your products, you are waiting for feedback from authorities. And in the case of a generic Ozempic, for example, we are going to launch it in more than 80 countries. So we are awaiting approvals from those countries, and as they will accumulate, we will be able to open those markets for the patients of the markets.
All right. Ozempic, let's talk about that. It's the primary headline. It's what has perhaps got the shares up. And remember, the shares are up 5% after the results came and that announcement, but down from the past 1 month, 5%. That's when it's been impacted. So it's not been the best times for the general pharma sector. We'll get to that. But about Ozempic, I just want to understand, okay, we'll come back to you. We have the decision that's come in from the BOJ, the Bank of Japan. Please be patient with us, Erez. We'll just come back to you. We just want to break down what's happened. Well, let's just break that down very quickly. We're learning right now that the BOJ has gone ahead and made that decision. What do we know? It has maintained its short-term interest rate at 0.75%. So in line with what was expected, this is something that most analysts expected. What's been said? It's primarily the point that it's going to be done. They are going to continue to increase those interest rates, but they're going to do it slowly, and it's the pace at which they do that that's going to impact not just the economy, the yen, global markets, bonds, and also potentially how the politicians react. The Prime Minister, Sanae Takaichi, if she does remain the Prime Minister because she's called snap elections. What else has been said? Let's just make that clear. At this point in time, the BOJ is saying that there are risks to inflation outlook. They're roughly balanced. A BOJ board member, Takata, descended to the decision on the rates. The BOJ in general saying the risk to economic outlook roughly balanced. That's interesting, while one person is dissenting. They've also said that we will continue to raise policy rate if economy prices move in line with its forecast in accordance with improvements in the economy and the prices. And what we do know is that the board member who dissented, BOJ's Takata, considered that the price stability target had been more or less achieved, and that with overseas economies being in a recovery phase, risks to prices in Japan, interestingly, making that point, this is a long alert that we've got. I got to read that again. But the BOJ report saying we'll continue to raise policy rate if economy prices move in line with this forecast in accordance with improvements in the economy. And also the BOJ getting into inflation, board's core CPI fiscal 2025 median forecast at 3% versus the 2.8%, so increasing that in general. And this is a policy decision made 8-1 in terms of the vote numbers. We also know that they're saying the board's core CPI fiscal 2025 median forecast is from 2.7% to 2.7%, so staying the same. But in 2026, it's gone from the 1.9% versus 1.8% in October. So it's increased a little bit. That's what they've said. So this decision just coming in, we're going to be getting into not just the snap elections, the politics, a couple of other things. We're watching the Nikkei 225, how the bonds are reacting. You're seeing that right now. The bonds have been in focus, particularly when you talk about the 10-year yield, not impacted as such in the last couple of days. The question is, when you have this talk of fiscal stimulus, will it be that the super long-term yield, that will be impacted? That's not clear right now. We will get into that in just a bit. But clearly, right now, a lot of developments coming in. Also, we are hearing that the BOJ report saying that they will conduct a monetary policy. They will conduct their monetary policy as appropriate from perspective of sustainably stably achieving that 2% inflation target. This is interesting because there's been one primary conversation when you talk about the BOJ in contrast to what's happening in the U.S. The U.S. also facing this question about whether central bank independence is still there? Is it changing? Is it eroding? And in Japan, that question has risen, perhaps not to the same level, of course, because, well, President Trump is not in Japan. He's in the U.S. What we do know at this point in time that there is this pressure that's playing out with the BOJ versus this particular government of Sanai Takaichi. If there's an election and set to be on Feb 8th, then we'll see how that evolves or changes, whether she gets a majority, whether she loses, how the politics in the country changes. BOJ's Takata also considered that the price stability target had been more or less achieved. That's an important point from one person who has dissented. The report on risks, this is interesting. Impact of FX volatility on prices has become larger than in the past as firms have become more active in raising prices and wages. That's what the BOJ is saying. Just let me break that down a little bit. The BOJ report saying, talking about risks, perhaps, given there have been so many questions around its decisions, the impact of FX volatility, when you talk about the yen and its depreciation, that's been a big question, although there have been some analysts who said that it could get to 150 from the 157 that it is in right now. This is interesting that they have addressed this aspect of risks, but we're going to come back to everything that's happening in Japan. There's a lot to cover. For the moment, let's just go back to Erez Israeli. Erez, thanks for your patience. I want to just go back to that point about the pharma sector overall down about 4%. In the last couple of months. It's not been the best story. It's been an area of concern. And in the outlook that we've heard from analysts, they are concerned too. Yours is just one company in the entire sector, so you can't be held responsible for everyone. But what's your outlook for the entire pharma sector?
No, so I'm actually optimistic about the sector, not just about the company. I believe that there is a very important technologies that are coming of patents. Most of the development are now in the biologics area. We are going to see many biologics products, especially in the cancer area, that we will need, for example, in the case of our sector, which is primarily about biosimilars and generics, we will see a need for much more affordable or access to affordability. The same as peptides, we discussed Ozempic, but actually there are about 44 peptides that will face the same in the next decades or so. So I'm optimistic. There are more people that live longer and they will need medicines. I don't think people should worry about this.
Okay. What people are worried about is how the companies are going to set themselves apart. And I say this only because you're getting these mixed reactions from brokerages, okay? That, well, not necessarily mixed reactions, but what they're saying, everyone is saying, is that the fun in the pharma sector, watching that is going to be with understanding what happens with the semaglutide launch. That's the big focus. You had said earlier that it's going to be probably in March, and I'll probably hold you to that. But when you have the following things happening, okay? the booming weight loss market. Everyone's trying to grab a share of that. And you have Eli Lilly and Novo launching Mounjaro, Wegovy, and Ozempic in India last year. And you're coming in now. And the moment they'd launched it, sales doubled shortly after the launch. So there's huge competition. What are you going to do to set yourself apart?
So we are going to obviously leverage the brand, our presence in India. We are obviously going to give very competitive and affordable products to patients. We believe that there is a huge need in India, especially, as well as in other places, both for both diabetics and weight loss. The companies that you mentioned are great companies. They just recently launched it. Only in India, about 30% are either diabetic or pre-diabetic in that respect. So there is a huge unmet need for this kind of products. We believe that there will be a very, very good demand for that, for us as well as for the others.
Okay, there will be good demand. That will be the thing that it's a cake that's where everyone's going to get a slice, basically. All right. Net profit fell 14.4% to 12.1 billion rupees, surpassing analyst average estimates of a fall of 10.70 billion rupees. Now, the profit decline, the first in 5 quarters, is due to slowing sales of the lenalidomide. This changes in 2028, you said, in my last interview with you. All right? So I'm holding you to that, if I'm right. The question is, what are the risks associated to the U.S. business outlook changing in 2028? Because Trump is going to still be there.
So naturally for companies like us that are putting affordable products, we do not have a concern about tariff or any of those because there is an interest for the American actually to have those kind of a product. It's the main concern for the pharmaceutical sector is obviously the places that the price in the United States is much higher than other markets, and there will be a demand to match that. And like most favorable nation, any other mechanism that will do that. The second for that is about the type of products that will be off patent and whether companies have access to this product and can they get the relevant market share and from the various customers, whether it's retail, whether it's hospitals, or whether it's a government channel. In general, we believe that, and we see about single-digit growth by that period of time, while we see double-digit growth in the other markets. So the way we mitigate the potential exposure in the US in terms of growth is by launching global programs. Every product is going to be launched in all the places in the world. And we believe that you can actually grow in this environment.
I wanted to ask you about the EBITDA margin also hit by labor codes and the fact that competition is the problem in the US, perhaps not so much Trump. But unfortunately, we're completely out of time. Erez, thanks so much for joining us. Erez from Dr. Reddy's Laboratories. We apologize because of this news that's coming from Japan. We had to kind of cut short this interview. We're going to go across to Kaori to understand what's happened. Kaori, what's your first reaction? You're joining us from Tokyo. Tell us, this was kind of priced in, the Bank of Japan maintaining those rates?
Economists were expecting that, but I think as fate would have it, you have two very powerful institutions really colliding today. One is the Bank of Government in the form of the Diet building that you see behind me, because these two are going to be very, very closely linked. And we're getting into uncharted territory here, because in about a half an hour, 40 minutes time, the Prime Minister Sanae Takaichi is going to convene the regular session of Diet, and then she is immediately going to shut it down. This is not in 60 years in Japan. And that sets in motion a very short election campaign period that runs for 16 days until February 8th. And the outcome of that is anyone's guess. And right now, because there's a new opposition, The Prime Minister herself is hoping that the popularity will translate into better numbers for the LDP and that her party might be able to win back a majority, if not outright, do a little bit better than the last two previous elections. But what is clear is that when Sanai Takaichi came in, investors were thinking, oh, maybe she is going to be responsible fiscally. But she has come out and said, look, I want to wade into this taboo topic of cutting taxes. And look at the reaction that we've seen in the spike in yields earlier on this year. This makes the Bank of Japan's decision, or going forward, rather because on the one hand, the Bank of Japan has been saying we're unwinding, we're going to look for a timing to address inflation. But then the Prime Minister has basically come out flat out and said, look, this has been my dream to cut taxes, and fiscal austerity, no, I don't think that's the answer right now. So those two forces are on a collision course. And when I say uncharted territory, that's exactly what I mean.
All right. Gauri, thanks so much for that. I'm sure we'll come back to you in about half an hour when you say the regular session will start and then be immediately dissolved, something that's not happened in 60 years in Japan. It's historic, and you're covering it. We'll be back with you in just a bit. We have with us Amir Anwarzadeh. He's the market strategist at Asymmetric Advisors right here with us in the studio. You've been patiently waiting for this decision, and you've been watching everything that's happened, all the reactions that are coming from the BOJ. We'll get into that. Some of the commentary that is coming, and that's what people were watching out for, to get a sense of how slowly they will continue to interest rates. What's your immediate interpretation, even as we continue to digest this commentary?
As Kari was saying, it's no surprise, given that we've seen a lot of volatility in the Japanese government bond market. We have the elections coming up, so it's very unlikely that Bank of Japan was going to do anything on the rates front. We believe that BOJ has been committing massive policy errors since 2022. They should have raised rates when they could. They didn't. The previous Bank of Japan governor, Kuroda-san, who's been was adamant that the inflation spike was mainly what they called as a cost push. And that meant that basically they meant that it was transitory. And we've seen that that's proved wrong. And the real kind of the victim, if you like, or the byproduct of this has been the weaker yen. The weaker yen itself is a self kind of reinforcing loop that it weakens the yen. And what we really think Bank of Japan should do now, not that that's going to, but we think what it should do now is increase rates by 50 basis points clips to actually rescue the yen. The yen is the key. And so, yeah, we think this policy error will continue for now.
All right. Policy error. That's a strong statement, I must say.
We've been saying it for 2 years.
Yeah.
And the yen's just been weaker and weaker. Inflation hasn't gone away. And now the JGB market is misbehaving. Now that window where they had time to raise rates has now been closed. And now you can see that.
You don't see it opening again this year?
Well, not with the populist government, going for
But that's
lower.
unpredictable. Feb 8th, everything could change. We don't know what's going to happen. Nobody's being able to call it. Like what's going to happen right now. Sure, she's popular right now because she's gone ahead and made this brave call.
Well, she'll be popular on the 8th of February.
That's the question, yeah.
No, I think she will.
She will still be.
I think she'll still be.
Okay, so you're calling it because others are not calling it. But you're not.
Okay,
you're not a political strategist. You're a market strategist. So that's something I want to make.
Well,
sure.
I hope I'm wrong.
Okay.
I hope that they change direction in terms of where the fiscal situation is going in Japan. So I truly hope that there will be pushbacks. But from what we're seeing in terms of the popularity of Takaichi-san, I think that she will stay in power, unfortunately, and I think that that's going to be reflected on the government bond market with yields continuing to spike higher. Our target for the 10-year by the end of this year is above 3%. It has been for the last 12 months, and we're sticking with it.
There's been one person from the BOJ board that has dissented, Takata. And BOJ Takata considered that the price stability target had been more or less achieved, and that with overseas economies being in a recovery phase, this is perhaps not the best time to do this effectively. Did you have a comment on that?
Well, yeah, I mean, look, not only when they say price stability, I think we've gone beyond that. I think inflation is been a problem. That's why consumption's been an issue. Individuals in Japan have been suffering from inflation eating into the real wages, right? So, and the other thing is that wage growth has been there, and that's one of the conditions that they had 2-3 years ago, is that, yeah, inflation's going up, but wage growth is not there yet. And that's been met as well. So there's absolutely no, I think, pretext now not to normalize interest rates in Japan. And some people are saying, well, if government bond yields spike higher,
Which ones are you referring to?
the 10-year, let's say,
Okay.
which is the key.
Yeah.
If that happens, then Bank of Japan could come in and ramp up its QE again. If they do that, the yen's going to go to 170 or higher.
Do you have an outlook for the yen? In both scenarios, if she wins or she loses, both scenarios.
I think the yen will remain weak. Just a question of how weak. If BOJ comes in to save the Japanese government bond market, it's like a whack-a-mole.
Which they can. All right, they have the power. With the 10-year, definitely.
Yeah.
Okay, let me ask you this. Because this is a question that's come in. If Takaichi does get a stronger mandate, will she put more pressure on the BOJ to actually refrain from rate hikes?
Right. What's going to happen to the yen?
Will she do it, you think?
I think she's doing it. I think it's becoming very, very difficult with her fiscal policy for BOJ to keep the bond market kind of controlled. And so they're under a lot of pressure, not from the Prime Minister, but from the bond market, not to raise rates now. So this is what I was saying with the window having been closed, right?
Yeah, the other side also, if Takaichi's mandate is reduced, so she's forced to quit, does that reduce the pressure? Does that reduce the pressure on the BOJ to raise rates to offset the fiscal looming?
I think that will reduce the pressure on BOJ to do what it needs to do.
Yeah, it will. Okay. My God, this is fascinating, the whole story. Talk to us a little bit about how you see Japan in the context of the world, because we've had these comments that have come in from the BOJ about uncertainties remain over the outlook for the global economy, such as the impact of trade policies, which could lead to a rise in import prices from the supply side.
Right.
This has just been said.
Yeah.
And then there's Trump.
This is the cost push inflation that they keep talking about. Yeah. What we've been saying is that the AI spending, which accounted for 50% of US GDP growth in the first half of last year, right? We think AI spending is very inflationary. And we think that if you look at the memory market, the memory prices, memory chip prices, that's the canary in the coal mine.
Okay.
So we think inflation will remain. And we don't think that interest rates globally are on a downtrend.
All right. Unfortunately, we're completely out of time. Japan is going to remain in the focus. We'll keep coming back to you. Thanks so much for that.
Thank you.
Time for a break. Lots more on the other side. welcome back. This is Inside India on CNBC. India's earnings season is really heating up. We're going to talk about that in a bit. But let's just go to the market open. We're looking at that in about 15 minutes, pre-open in about 10 minutes. So what's it looking like right now? Well, GIFT Nifty futures indicating that it's going to be, well, slightly muted. Nifty 50 had a up day, not much, yesterday after a couple of bad losses earlier in the week at 25,289 on close on Thursday. Nifty futures indicating might get to about 60 points extra. The rupee in focus simply because there seems to be some strengthening happening. Why it's happening, the usual reason traders give is that they report that the RBI is intervening. Maybe that's happening, we're not quite sure, because the rupee was inching closer to 92, right now at 91.5, strengthening just a bit. Now, Blackstone, backed Indian IT firm, we're talking about Emphasis today, reporting a Q3 revenue broadly in line with estimates as spending from banking and financial services clients showed signs of recovery. Revenue for the quarter rising more than 12% to $437 million. Net profit, however, missing expectations, up just 3%, partly due to a one-time charged linked to India's new labor codes. And this has been the story in the earnings season with almost every company. Nitin Rakesh is the CEO of Emphasis, joining us live from Bengaluru, India's, well, IT capital. Nitin, thanks so much for taking the time. Appreciate it. I don't know. Start with just giving us a sense of what headwinds you faced that you got to where you are right now, despite those headwinds, and are you looking forward to something drastically changing for the general IT sector going forward in the next Q4?
Sure. Firstly, thank you for having me. I think it's a fascinating time in our industry because there's not only so much going on in the world with macro and geopolitics. I think there's a lot going on with AI and the new tech cycle that is just about getting adopted by enterprises. So, of course, we sit right at the intersection of that adoption. So if you look at the earnings in the context of that, I think we've managed to position Emphasis really well when it comes to partnering with some of the largest names in enterprise, America especially, where the ability to now apply AI at scale, not only for efficiency, but also for reimagining the business and bring the ecosystem together, from a standpoint of helping them really look at what the new stack will look like and how that plays out over the next 3 to 5 years. So very pleased with the fact that we managed to grow double digits, in an environment where there is a fair amount of, pivot underway. We are moving from people-based services to a tech orchestration environment, and right in the middle of that, exciting times.
Okay. Okay. Feed growth. I want to talk to you a little bit about that. There's comfortable AI demand, but how is it really changing your business in the near term? Yeah, near term.
Yeah, I think if you think about what's going on in the stack from an enterprise tech standpoint, I think every part of the stack is being really looked at with an AI lens. Is there a better way to run operations? Is there a better way to do customer service? Can we use a combination of AI agents and human agents? Can we unlock a lot of the inefficiency and the legacy tech that's sitting in our systems for the last 30, 40, 50 years? Remember, most of the world runs on applications that were built in the 60s, 70s, and 80s. And we've never really had the luxury of time or money to remove the tech debt that sits in those applications, and we've kept putting layers and veneers on top of those cores, whether it was internet and then it was digital. Now I think we have an opportunity to really untangle a lot of that because we can train agents to go into those old applications and extract what needs to be extracted in a way that we can actually get rid of those old legacy systems and rebuild the stack in a much simpler AI native way. So that's really the journey and the direction of travel. How can we meet the short-term objectives and tech needs for enterprises while keeping that longer-term transformation at play is the threading of the needle that we have to do.
Okay. You have secured a large-scale deal exceeding, $100 million in the banking and financial services sector. But you've not shared much details about that. Can you do that on CNBC?
Sure. I can't, unfortunately, name the customer because we're not allowed to by confidentiality clauses. But effectively, if you think about the nature of what I just talked about, right? This is a long-term deal where we take on an existing large legacy set of applications with a view that we will provide the customer with a completely rebuilt, cloud-native, AI-ready application stack. And while we are doing that, we are also transforming the way they run the application so we can free up some of the money. So it's kind of what we call a savings-led transformation approach. And the reason why it's strategic is because we are effectively freeing up the money from existing operations, using that to redeploy back into the new build. And from the bank's perspective, it actually gives them best of both worlds. They're on the modernization journey without having to actually spend to either save money or rebuild the stack. So that's the nature of the application. This one particularly happens to be in the payment space, global payments platform, and fairly strategic, not just for that customer, but for the ecosystem of the payments world as well.
Okay, let me try to get some more information out of you. Can you talk to us about top 20 clients, your top 20 clients, and the headwind that came from them? What impact could it have on growth? And I ask for specific, contract renewal details, risk exposures, and generally the quantification of the client risk profile.
So again, if you look at the way this market is working, every time a client's either looking at, okay, what is the cycle of renewal that we're going to follow, or even generally, as we look at 2026 budgets, 2 or 3 macro trends that are playing into the entire segment of customers, especially because, we deal with a lot of banks and insurance companies in our top 20 customers. Wherever there is an opportunity to apply efficiency using an AI or a shift left or an automated attrition approach, you can expect that if you're renewing a contract that was about a large run business, run book, production assurance, even cyber, you should expect the client to ask you for a 20 to 30% efficiency coming out of the cycle of that adoption of new stack. So that's the headwind that you have to deal with, because efficiency and client expectation on that is a given. The countervailing force to that, or the tailwind to that, is a lot of investment is going into building the AI stack, data and governance pipelines, bringing data into a cloud in a new platform, applying all of that in terms of modernizing the application estate. So the winners in this cycle, whether it's top 10 or top 20 customers, is where you can find more demand than the headwind that you're seeing from the efficiency ask from the customer. So being in that sweet spot where your ability to help fast forward the stack build out, follow where the money and the investment is going to go from an enterprise build standpoint, AI engineering is a number one focus. And of course, then partnering with them and rolling that out at an enterprise level is a big opportunity where a lot of money is being moved to. So being in those areas where the money is going, having the ability to bring that to life is the real opportunity. And that's the reason why you're seeing a pretty healthy growth in our banking business, because banks have been fairly forward-leaning, especially in the Western world, in taking on this AI stack development.
And this is why it's fascinating. It's all about speed, how fast you actually take on this opportunity or risk, however you frame it. Just talk to us a little bit, link this, because, you could link it to this total contract value was surprisingly below 50% for the quarter, as I understand it. Which specific sectors, geographies, or deal types caused this?
Yeah, I think the way to think about the total contract value, at least in the context of our business, is to look at the last 4 quarters or a trailing 12-month period, because otherwise, 1 or 2 large deals can be very lumpy. On a trailing 12-month basis, we've sold $2+ billion in deals for a company that's under $2 billion in revenue. These are just net new deals. So I think we are actually running at about 100% YOY growth in our trailing 12-month deal win percentage, which is fairly healthy. And that's what's driving a lot of the revenue growth that you're seeing coming out of especially the banking and the insurance segments. In terms of trajectory, pipelines are still pretty good for us. Even on a YOY basis, the pipeline's up about 70%. A lot of large deal making activities going on, pretty much in the nature of what I just explained to you, in terms of, do you find the ability and the competency and the platforms that you've built to accelerate those journeys for customers, and then you take on the outcome-driven model of delivering them that transformation journey, whether it's modernizing an application or a data platform or building out a whole new AI stack. So actually, we are quite pleased. I don't think the Q3 number of $428 billion is necessarily the only number to look at. I mean, we sold more business in the first half of our financial year than we did in the full financial year last year. So we're actually very, very pleased with the momentum we're seeing on the deal front, across segments, across geographies.
No, we are looking at other numbers too. I promise you. I promise you that. The one number that we are looking at, and this is something that is not just for you. It's for the entire, Indian IT sector, perhaps all the companies. But let's talk about the IT sector. You represent that in a sense. How does Mphasis justify its valuation? That's been the biggest concern with other IT companies too. When investors are looking for those returns that could be expected from that AI-driven efficiency that you were talking about, when can those investors actually get that kind of return?
Again, I think, firstly, it's very difficult to take a sector view that you can use the broad brush and say the sector should be at a certain value of X or Y or Z. The nuance that you have to look at is what part of the stack are you playing in? What is the portfolio in terms of the opportunity? And I mean, AI is really a double-edged sword. Are you more susceptible to disruption, or are you more susceptible to taking the opportunity and looking at upside coming out of that? So I think you have to be a little bit more nuanced when it comes to the portfolio and the opportunity set, which is why you will see that over the last 12, 18 months, 24 months even, there's a fairly high degree of variance in returns coming out of a number of players within the sector, not just in India, but even in the US or the global stack. So that's the first starting point from my standpoint. And I think companies that have invested over the long term, especially over the last 5 years, in actually having the ability to apply AI at scale will be the ones that will see an outsized amount of growth. So I think growth will become divergent. The threat of efficiency or AI deflation will be different for different companies based on their portfolios. And in the end, execution will trump everything else that you see there.
Okay, fascinating. Yes or no question, completely out of time. Any plans to diversify out of North America due to policy uncertainty?
Nothing unusual. We've already invested big time in other markets outside of the US, Canada, and Europe included. So we'll stay on that path.
All right. Nitin, thanks so much for that. Really appreciate you coming on and taking some hard questions. That's always a great aspect of conversation. And Nitin Rakesh from Mphasis. Staying with the Indian IT sector and AI, CNBC's Dan Murphy caught up with the CEO of one of the biggest IT services firms in India, Mphasis, at the World Economic Forum in Davos. CEO Salil Parekh told him more about how AI is pushing IT firms to change their portfolios to find new growth areas, something we were talking about. Here's a slice of that conversation.
We see next year looking better than this year. We see discretionary spend in our business, in energy and utilities, another industry where we see good growth. However, there are some areas where we do see some compression because of AI, and some industries, for example, retail or high tech, where the outlook is still not as clear as for financial services.
Expand on that for me. Where are you seeing the compression right now?
So in compression, we see many AI technologies reduce things that we were doing in the past, whether it's on business process operations or whether it's on IT development. So the earlier point I made on expansion, we see that being larger than the compression, but nonetheless, there is some compression and expansion. So we have to shift our portfolio into the new. And if we can execute that well, we see good growth.
Dan also spoke to the CEO of Tech Mahindra in Davos, who clarified that the $500 million deal it signed is not with Spain's Telefonica, as reported by domestic media outlet Mint.
So we've just announced that we have signed a $500 million deal without naming any client.
We're counting down to the market open in Mumbai. We're back in 2. Welcome back. This is Inside India. Indian markets are indeed, well, have come online. The Nifty 50 right now at 25,260, down about 0.1%. The rupee is where the focus has been. Well, still strengthening. That's interesting. It has been a weak time for the rupee. A lot of pressure, global uncertainty, the dollar weakening, and yet the rupee continuing to see the impact of foreign outflows from India. Continuing to weaken it. We'll talk about all of that in just a little bit more, but we're focusing on one particular share, which is of Indigo. We've been talking about the profits slumping at India's biggest air carrier. Our travel and transport reporter, Monica Petrelli, is joining us right now with the details right here. Monica, they're down about 1.67%. What's the latest that you have for us?
Yeah, well, earnings from the third quarter, which closed the end of the year for 2025, releasing yesterday, showing profits down 78%. So we knew it was going to be a tough quarter, and it definitely was. And final profits after tax, about 5.5 billion rupees, or around $60 million. And there's really three big areas where we saw this really taking a hit at Indigo. The first, well, of course, those big cancellations, that mass cancellation event back in December, that the company's saying costing around $63 million. That's in everything from refunds to hotels, meals. It also said it gave some vouchers to those that were especially hit hard. There was also new labor laws, though, and look at that, actually taking a bigger toll than that cancellation. That's something that the company says is a one-time cost, but it will be wrapping into employee costs going forward. But finally, and this is really the ongoing issue for Indigo, is the FX losses here. And this is because, one, as you just talked about, the depreciating rupee, but also because of how much exposure that Indigo has here. A lot of the planes that it leases and a lot of the maintenance costs in USD, and it simply doesn't have a lot of USD coming in. So that really probably is something that we need to continue to watch for. But you know, overall, Indigo is saying, look, we actually flew more people at the end of last year than we did year on year. Flights back on track, but the pain, though, from that issue still not fully over, because we know capacity down. Regulators saying they were going to reduce capacity for Indigo here in the winter schedule. That, the company says, is going to increase overall cost. Interestingly, though, Indigo says we're increasing capacity, but not to the extent that we wanted to. So overall, then, cost per person will be going up in the future.
Okay, let me just understand a couple of things, because we'll talk about a comparison with Air India, the other one, when you compare the fact that India is considered effectively a airline duopoly between these two. So we have to talk about Air India, and we don't get visibility on that, on their numbers. I want to just understand this. Is Indigo's reputation problem after December with this loss in the quarter Q3 going to be hit further in your eyes?
I think if you've got to choose between the two, you're obviously going to be on the side of Indigo here. Yes, it was a catastrophic quarter for Indigo, but however, nothing, in any type of mass cancellation event will never compare to, say, a crash incident like we're seeing over on Air India's side. Will the reputation persist? I guess the reputation is still really good. And I think that's really what surprised people.
Compared to Air India, yes. The problem is that the government has come up with this fine that you talked about. What's it, 2.4
million.
That's too less is what the feeling was. That's why the market on that day was like, oh my God, they got away scot-free effectively.
Yes, especially when you see the losses that we just put up there. 2.4 million. And interestingly, that's already baked into this. So
we were talking about this.
Yes.
We don't know how that's baked in. And perhaps we'll get more visibility on why that's the case, because the order came, Jan 18th, right? And December 31st was the quarter end. So how was it baked in?
Exactly. It is a record number. So maybe Indigo said, look, we're going to get dinged. They're probably going to ding us a lot. We can estimate this. Or perhaps they simply know. We don't know, but we know that it's not going to be on the books for this quarter. And that's what people are asking about. But look, compared to those FX issues, that fine is a drop in the bucket. But Indigo they addressed it in the earnings call last night, trying to make headway with those FX losses. One, hedging that they're trying to do. Two, trying to buy the aircraft. They've got cash, but it's the planes. You've got to get your hands on the planes. We know that they've ordered planes, but how to get them? So they're trying to, Indigo trying to change some of those leases that it has into actual ownership. And then finally, expanding those international routes, because who will pay in USD? People coming in internationally. So that's the issue. So this is still going to be a long-term issue, but the company says it's trying to get there.
Briefly speaking, are you more worried about Indigo or Air India? The numbers.
More worried about Air India. I mean, the money, the backing is there. We know the money, and with Tata Group and also with SIA, but we don't have the clarity there, because the only type of numbers that we can see from Air India is what we can see from that when Singapore Airlines reports, and even then, it's a bit of reading between the lines.
Fantastic, as always. Thanks so much for that, Monica, giving us a lowdown on everything that's happening up in the air. All right, a quick look at shares of the Adani Group of companies. We're talking about two of them, particularly Adani Energy and Adani Total Gas Q3 results. Let me just get through that. Reports saying very clearly that two of these group energy firms reporting their earnings. Effectively, it's been mixed results, but closer to estimates. Adani Energy reporting 2% year-on-year net profit decline. Revenue rose 15% year-on-year. EBITDA hit a record high up of 21% year-on-year, but Total Gas reported first profit in 5 quarters. So that's the big takeaway. And even though it's a smaller company than Adani Energy, and its net profit rose about 11.4% in Q3, the other Adani companies is where we'll get the color, where we'll get the full picture, still to report Q3 results. So we're watching this. At this point in time, though, take a look at everything that's happening. All red, the entire Adani portfolio. Reliance Industries also reported earlier Q3 earnings missed profit estimates. And the reason we're talking about both Adani and Reliance are these are the big companies when you think about energy in India. And that's our focus going next week. We're going to be in Goa, in India, traveling down there using either Indigo or Air India. India Energy Week will be interviewing these gentlemen and one lady, of course, perhaps more ladies. So we're going to be giving you a little bit of color on just what India's energy sector is looking like, what are the challenges, what are the problems, the UAE deal worth $3 billion, Canada coming into the picture, wanting to negotiate or restart negotiations. There's a lot to cover. So stay with us. For the moment, though, we're going to switch to another interesting story, although not impacting India directly. TikTok's Chinese owner, ByteDance, has finally inked a deal with the US. Just one day ahead of Trump's divest or ban deadline. CNBC's China reporter, Elaine Yu, has all the details. Elaine, what's going on?
Hey, Amatosh. So TikTok has officially announced a new joint venture spinning off its American business and helping it avert a ban as the deadline expires today, actually. And this new entity called the TikTok USDS joint venture will operate as an independent entity and governed by a new 7-member, mostly American board of directors, and the CEO of this joint venture will be Adam Presser, while Will Ferrell, not to be confused with the comedian, will be the chief security officer. Now, TikTok says that American user data as well as the content recommendation algorithm will be secured in Oracle's US-based cloud environment, and that the JV will also retrain, test, and update the algorithm based on American user data. And the entity is also majority owned by US investors, with Oracle, Silver Lake, and the Abu Dhabi-based MGX being the 3 managing investors, each with a 15% stake. And others in the consortium includes Michael Dell's family office and Susquehanna as well, while ByteDance will retain a 19.9% stake, so just under the 20% threshold as required. Now, Trump has commented on Truth Social, saying he's happy to have helped save the deal, and he also thanked President Xi Jinping for working with the U.S. and ultimately approving the deal. And so this brings a closure to a years-long battle over TikTok. And we're talking to Clark Jennings from Corral Global Advisors earlier on the channel as well, and he said this creates a new pathway for combining market access and risk mitigation over security. And he noted that there are still a lot of scrutiny in Washington over security issues, but this does offer a template for Chinese tech companies who want to access the U.S. market. Amatosh?
Well, thanks so much for that, Elaine. We'll have to see whether this template is actually sustainable given the unpredictability when you think about both the U.S. and obviously China. But yeah, for the moment, Quite amazing. That's all the time we have today on Inside India. Keep watching CNBC, of course. Access Middle East is up next, and there's a lot to cover. Stay tuned.